All right, one of the main things that you could look at today is the market depth indicator. This was a huge indicator of not to buy the dip. You see the purples are the cyan leading the way. Blue is bullish, purple is bearish, and on Friday, this sell-off on August the 23rd, you see purple's leading the way all the way down. And so there was never really a reason to try to buy the dip as long as these purples are leading the way. And there's also, it also helps give you confidence in staying short. So a lot of the strategies were short. And if you're like me over the last 10 years, when you have a short strategy, there's been a lot of counter trend rallies that for example, blow up your shorts. There's still strategies that we have that have great results over the last 10 years on the short side, but you remember those trades emotionally where your shorts are blown up, I guess. You have a good profit, and then you're sticking with the system, and then the market violently reverses and stops you out. And you tend to remember those more than the ones that were winners. Cobra 3 is an example of that type of strategy. I'm going to go to that strategy now and show you that strategy. Here is Cobra 3, evening NASDAQ. And so the market sold hard right here on the Trump tweet about encouraging American businesses encouraging U.S. manufacturers to leave China. And then it was just kind of a choppy downtrend. So there's no additional fast selling after this first bar. It was a steady sell-off. And whenever you get a slow, steady sell-off, sometimes it feels like the market is just going to reverse. It just has that tendency. You just have this slow tendency to all of a sudden, boom. You're used to this downtrend, and then boom, downtrend, and then boom at some point. And so watching the market depth indicator really helps can help give you confidence on staying in a short trade, because there's a huge amount of a bearish tone in this indicator. So we use this indicator to determine what the trend is. You see that the purples led the way right here, starting at 12:56. It was fairly bullish. It was a tricky day, selling here and then a rally here. That seemed really volatile. And then the Trump tweet right here sent the market down the rest of the day. Very bearish. Thoughts are that he was trying to push the hand of the Fed to cut interest rates. So if the U.S. Manufacturers leave China and the trade war intensifies, then the Fed will be forced to cut rates, which is something he really wants. And so he's playing that card. Look at the market depth cumulative difference here. It's trended down from 11:30. So once Europe closed, the trend was down on the market depth indicator, meaning there were more bids than offers. And when there's more bids, they're selling into the order book. The purple means they're selling into the order book more, and so there's lots of selling. And so ideally, the order book should be equally balanced. But when there's lots of selling, you see the depth of the bids increase, and you see that purple, and that is the trend. It's counterintuitive to what you would think. You'd think if there's more bids, then that's buyers coming in, but the order book is the market makers, and so they try to keep that order book balanced. And when you get an overbalance of bids, there's just fast selling into that order book, and so you see that over and over again throughout the day. If blue comes in, you're buying into the order book, going long into the order book, and so that can be a bullish signal. But the purples were the strong points throughout the day. You see that here in the order book in the market depth indicator. And so interesting. It was an interesting day, and this market depth indicator is a nice addition to have if you're looking for confidence in your strategies to stay short. And so here's Cobra 3. It stayed short. Some of the other strategies, we'll go over those real quick. Tick Pulse made a little bit of money, 1237.50. Same thing. It always looks like it's about to rally. And if you've been trading for years, these little spikes sometimes turn into big spikes. And if you watch it, it can be difficult to stay with. Sometimes it's best just not to watch it. Watch it enough to know that your signals are technically accurate in there, and then just to watch the. It's tricky as a trader. You're watching the market. It's important to watch the market to understand the evolution of patterns and to see new systems, but sometimes it's hard to watch your strategies, especially on big sell-offs when there's been lots of counter trend rallies. And so here's adaptive moving average, huge trade today, 31.25, and huge trade today on gap continuation 2019. Love this strategy a lot. Let's look at the performance summary. Love this strategy. $300 stop loss. How often do you get to trade the NASDAQ with a $300 stop loss and see this kind of performance? So, love these trades. Night trader, it was stopped out, so we're down on that strategy. Let's see what else. Gap fill master, nice long trade, and let's see, what was the QS3. So the long strategies have struggled, and the short strategies are doing well. So that should tell you what the trend is. As I've been saying and have been anticipating, the market has been propped up here. This was the original sell-off, and there's a lot of propping that's gone up between this low and here. And now this is more reality. These down moves are reality. See how fast these down moves occur? It's like, okay, this is reality kicking in. No, the reality is kicking in. No, reality is kicking in. No. And we'll see if that no continues or if reality does take over next week. And up until today's news, I was anticipating higher prices, but after today's news, I anticipate lower prices next week.